Hey, Captain Mortgage here with my good friend Darian Payne, aka the Closer with Creative Realty. And this is going to be the next segment in my series of Put Your Money Where Your Mouth Is. So this is all about people in the real estate industry telling you that it's still a good time to buy, but have they put their money where their mouth is? So Darian has purchased and refinanced the house in the last year. Darian, what would you say about the market and why you felt comfortable upgrading homes and purchasing a larger, more expensive home?
I felt like it was the perfect timing back then when I refinanced and when I bought my home. When I bought my home, the market was just about ready to explode. So I kind of got it right at the perfect time. I've been thinking for like the last 6 months about selling my previous home. So we started doing some upgrades to get it ready to put it on the market. Finally found one that we really liked. So we put it on the market. It was gone in no time. So we purchased the other one. And I felt like timing is everything. It was the perfect time to upgrade and move my family into a bigger home, a more comfortable home that made it feel like a home instead of a house.
All good points. When the time is right, the time is right for your family. All the noise you hear in the media and stuff like that, it's just that. It's noise. It's meaningless. What matters to you, or should matter to you, is what's best for your family and what's best for your wealth management for the future, your retirement, right? That house is one of the biggest assets you'll ever own. Tell us a little bit about the refinance, because after purchasing, you went ahead and took advantage of the continuing rise in home values, home prices, to refinance and invest elsewhere.
Yeah, so I decided to refinance because when I first bought the house, I was able to put down the 20%. So I had a lot of equity in my house, and I actually still do have a lot of equity. So I took the opportunity to take the money out and invest it into a business. So that's one thing you can do if you have a lot of equity in the house. If you're thinking about refinancing, take it out, the equity, either buy some rental property or invest it somewhere else. Right now, I'm not sure if the refinance would be the best thing to do. Chad can give you more information regarding the HELOC. What you can do is something like almost like a credit card. Can you explain that to them?
Yeah, so cash out refinance or a HELOC is a great conversation to have with me or whoever your lender is. There's pros and cons to both. HELOC kind of works similar to a credit card. You get X amount of dollars and you're able to take that money out of the account, spend it as you choose for the first 20 years. And then the next 10 after that, you have 10 years to pay it back, okay? So if you keep taking money out, putting it back, take money, put it back, like a credit card, then you should be fine at the end. Now, if you spend it all, and then you get to that 20-year mark and it's time to pay the piper, well, now you have an additional payment and some cause for concern maybe. Then you'll have to potentially either sell or refinance your house to get out from that. Cash out refinance, even with rates being higher, I'm still seeing it quite a bit for multiple reasons. Interest rate in the fives for a home spread out over 30 years is still a lot cheaper than a personal loan, which is in the nines and tens, as well as a credit card, which a lot of folks are in the high 20s. And then also, like he said, for his business, cheaper than a business loan, easier than government red tape for other programs. And also it's still cheaper, much cheaper than the interest rates on an investment property. For some of you that have been holding on to your houses for years and years, you probably have more equity in your home than you realize. You could potentially do a cash out, take those funds, and at minimum put a sizable down payment down on investment property, which is going to generate income for you, or potentially pay cash for it. We've had clients do that, both me and him. And also, don't forget, when it comes to mortgages, your interest is a tax write-off. Darian, I appreciate you being here. I appreciate you sharing your story, man. And I'm glad that you're not just telling people to buy, but you're putting your own money where your mouth is, my friend.
Exactly.
Shake and bake.